Welcome back, traders. In this particular video, we are just going to break down understanding market, limit, and stop orders so that you can execute your trades with more clarity and discipline. Okay? So these three other types are the foundation of trading, and knowing how to use them properly can make all the difference. Okay, let us start with market orders. Now, a market order is the simplest type of trade execution. When you place a market order, you are telling your broker that you want to buy or sell immediately at the best available price. So this is useful when you need to get into or out of a trade quickly. The advantage of a market order is speed. All right, you don't have to wait, but the downside is that you may not always get the exact price that you expect, especially in fast moving markets. Slippage can occur, meaning the order is filled at a slightly different price than what you clicked. Giving you an example, this is a demo account, so I'm just going to give you an example. Now on USD CHF, we can see that we are currently in a downtrend, right? So market order means that, after doing your analysis, maybe you found after price broke below this support zone, you found here to be a good place to sell, right? But in as much as you didn't, come on time, right? Because we should have entered somewhere around here. You didn't come on time. So you decided to sell still, right? Because you're expecting price to go down further. Okay. In as much as you didn't, find this opportunity on time, you're still expecting price to go down further, right? So we just go ahead. We use our we do our calculation, select our lot size. Let's say we're using 0.03 and we execute immediately, right? So that is a market order. You sell immediately or you buy immediately. That is a market order. Now let us talk about limit orders, okay? A limit order allows you to set a specific price at which you want to buy or sell, right? The trade only executes if the market reaches that price or better. For example, if we wanted to sell, at a price that is higher than this current price, just like what I said, we notice that USD CHF is in a bearish trend, but this time around, we don't want to enter immediately because we want to enter at a better price, right? So we can decide to use a sell limit. You can see we have different limit orders. We have sell limit, buy stop, sell stop, and buy limit, right? The reason why it's only sell limit and buy stop that shows here is because I want to open the pending order at a price that is higher than current price. But let us just go to new order. You're going to see different pending orders. So you can see we have buy limit, sell limit, buy stop, sell stop, buy stop limit, sell stop limit. Okay. So now, but let's just continue with the example I was giving. So I want to enter at a price higher than the current price, right? And then I will have to set a sell limit order and let the market come to me. So I'm just going to set a sell limit order and adjust it, right? So I want the market to come to me. So if the market should go up to this place, this sell trade is going to be executed. All right. So the big advantage here is control. You decide the price that you want to enter or exit at. However, the trade-off is that your order may not always be filled if price never touches your level. So now, if this sell momentum, if this bearish momentum is strong, we might have price continue to go down. Price will just leave us behind. right? Price might just leave us behind, keep on going down and all of that. And well, our pending order may never get executed. So that's one of the downsides. Okay. So limit orders are great for traders who plan their entries carefully and want precision. Now let us move on to stop orders. All right. A stop order is a bit different because it becomes a market order once the stop price is reached. Okay. Stop orders are often used to enter trades after confirmation or to manage risk with stop loss orders. All right. For example, you might place a buy stop above current price. Maybe I want to have a plan B. All right. We are in a sell trend. Price is respecting this bearish trend line. But then I wonder, what if price eventually breaks out of this bearish trend line? If price breaks out of this bearish trend line and this particular newly formed resistance turns into a support, we might have a bullish move, right? So let's say I've thought about that and I decided, okay, I am going to set a buy stop above this resistance and as well above this bearish trend line, so that in case if price decides to reverse its course, I'm not going to miss out, right? So stop orders are used to enter trades that that are mostly breakout trades, right? So you are expecting a breakout to the upside and you set a buy stop order, and your buy stop is going to get triggered if the price should climb to that level. On the other hand, you're setting a sell stop probably below a support level. You're expecting if price should break out, it's going to get triggered and continue your direction. All right. So the advantage of stop orders is that they help you participate in breakouts or protect your account by cutting losses automatically, right? So that is if you are in a sell trade, for example, and you set a stop loss. Of course, stop loss is going to be above current price. So that's also a stop order, right? Or maybe you are in a buy trade and you set a stop loss below current price. That's also a stop order. So to summarize, market orders get you in instantly at the current price. Limit orders let you set the price you want and wait for the market to meet it. Stop orders trigger only after a specific price level is reached, then execute as a market order. Now, understanding how each of these works helps you match the right order type to your strategy. If you are scalping and you need instant execution, market orders might make sense, right? But if you are patient and waiting for price to come to a key level, limit orders are your best tool, all right? And if you want to join momentum or protect yourself from risk, stop orders are essential. The bottom line is this: knowing when and how to use market, limit, and stop orders gives you structure and discipline in your trading. Okay, so instead of guessing or reacting emotionally, you'll be using tools designed to execute your plan with precision. Okay, so if this explanation on understanding market, limit, and stop orders was helpful, make sure to smash the like button and hit subscribe for more Forex trading education. All right, and I'd love to hear from you. What type of order do you use most often and why? Drop your answer in the comments so we can learn from each other. Thank you for watching, and I'll see you in the next video. Happy trading.